Hello everyone! In today's video we are going to talk about mutual funds, which are a popular investment option for many people. Mutual funds are an investment vehicle that pools money from many investors to buy securities such as stocks, bonds, and other assets. In this we will explore the world of mutual funds, including what they are, how to invest in bonds through mutual funds, and some famous and trusted mutual fund companies in India and abroad. We will also discuss how mutual funds work, with an example, as well as the positive and negative aspects of investing in mutual funds. Mutual funds. Mutual funds are a type of investment vehicle that pools money from many investors to buy securities such as stocks, bonds, and other assets. Mutual funds are professionally managed, and the fund manager invests the pooled money in various securities to achieve the fund's investment objectives. Mutual funds are popular among investors because they offer diversification, professional management, and affordability. Investing in bonds through mutual funds. Bonds are a type of fixed income investment that can provide regular income to investors. Investing in bonds through mutual funds is a great way to diversify your investment portfolio while minimizing risk. Mutual funds invest in a variety of bonds, including government bonds, municipal bonds, and corporate bonds. When you invest in a bond mutual fund, you are essentially investing in a portfolio of bonds managed by a professional fund manager. Famous and trusted mutual fund companies in India and abroad. There are many mutual fund companies in India and abroad, but some of the most famous and trusted ones include HDFC Mutual Fund, Assisi Prudential Mutual Fund, SBI Mutual Fund, Franklin Templeton, and BlackRock. These companies have a track record of delivering consistent returns and are known for their professional management and customer service. How mutual funds work. Mutual funds work by pooling money from many investors to buy securities such as stocks, bonds, and other assets. The pooled money is then managed by a professional fund manager who invests in various securities to achieve the fund's investment objectives. The fund manager makes investment decisions on behalf of the investors, and the returns are distributed to the investors in proportion to their investments. For example, if you invest 10,000 rupees in a mutual fund, and the fund returns 10% in a year, you would receive 1,000 rupees as returns on your investment. Mutual funds in foreign markets. Investing in mutual funds in foreign markets is a great way to diversify your investment portfolio while gaining exposure to different economies and markets. Some of the famous and trusted mutual fund companies in foreign markets include Vanguard, Fidelity, and BlackRock. These companies offer a range of mutual funds that invest in different regions and sectors, giving investors the opportunity to diversify their investments across the globe. Positives and negatives of investing in mutual funds. Like any investment, mutual funds have their positives and negatives. Some of the positives of investing in mutual funds include diversification, professional management, and affordability. Mutual funds allow investors to diversify their investments across different asset classes and sectors, which helps minimize risk. Mutual funds are also managed by professional fund managers, who have the knowledge and experience to make sound investment decisions. Additionally, mutual funds are affordable, making them accessible to a wide range of investors. On the downside, mutual funds have fees and expenses that can eat into your returns. Mutual fund fees can include management fees, sales charges, and redemption fees, among others. Additionally, mutual funds are subject to market risk, and the value of your investment can go up or down depending on market conditions. Mutual funds are investment vehicles that pool money from multiple investors and invest it in a diversified portfolio of stocks, bonds, and other financial instruments. Here are some reasons why mutual funds can be more effective than individual shares, bonds, and other financial instruments. 1. Diversification. Mutual funds offer diversification across different asset classes, sectors, and geographies, which can help reduce the risk of investment losses. By investing in a mutual fund, investors can gain exposure to a diversified portfolio of securities with a single investment, which can be more efficient than purchasing individual shares or bonds. 2. Professional management. Mutual funds are managed by professional fund managers who have the expertise and resources to research and analyze securities and make informed investment decisions. This can be beneficial for individual investors who may not have the time, knowledge, or resources to conduct their own investment research. 3. Cost-effective. Investing in a mutual fund can be cost-effective, especially for small investors. The fees charged by mutual funds are typically lower than the costs associated with buying and selling individual securities. 4. Liquidity. Mutual funds are generally more liquid than individual securities, making it easier for investors to buy and sell their investments. Mutual funds can be bought or sold at the end of each trading day at the net asset value (NAV) of the fund. 5. Access to different markets. Mutual funds provide access to different markets, including international markets, that individual investors may not have access to. This can help investors diversify their portfolios and potentially generate higher returns. Overall, mutual funds can be a more effective investment option than individual shares, bonds, and other financial instruments for investors who want a diversified portfolio, professional management, cost-effectiveness, liquidity, and access to different markets. However, it's important to note that mutual funds come with their own risks, and investors should carefully consider their investment objectives, risk tolerance, and the fees and expenses associated with the mutual fund before investing. Hey there! Thanks for stopping by our YouTube channel. If you enjoy our content, make sure to hit the subscribe button and turn on notifications so you never miss an upload. By subscribing, you'll be part of our community and get access to exclusive content, behind-the-scenes updates, and more. We appreciate your support and look forward to seeing you in our next video. Conclusion. In conclusion, mutual funds are a popular investment option that offers diversification, professional management, and affordability.